Hey, what's good, everybody? Today I wanted to do a quick trade breakdown on the trade that I took in the morning of Wednesday, FOMC day. I didn't plan on recording this trade, which is why I don't have the full recording, but I wanted to capture it because my TP hit and it ended up being one of the best trades that I've ever taken from a point standpoint. It was a 220 point trade taken in the morning and held through FOMC and pretty much trading the full daily range um, almost from high to low. So wanted to do a full breakdown. I alerted this and where I was looking for shorts from in my Discord. It's a free Discord, free community where I'm giving my trade ideas. Other people are giving their trade ideas. We're doing, full trade breakdowns, weekly breakdowns, and live sessions that aren't included on this YouTube channel. So if you wanted to go ahead and join that and be a part of the free community, I'll leave a link down in the description. So feel free to join that. But let's go ahead and get into the breakdown of this trade. All right, guys, so diving into this trade breakdown here, you can see I'm on the daily chart on NASDAQ futures here, NQ, and I'm starting on the daily chart because one, I want to do a full top-down analysis, but two, you can see, and I want to explain that we're kind of trading in a tough range right now. You can see we have this daily fair value gap up here. This is a daily SIBI, and then we have a daily BISI below us right here. And so with the last several days, we've been trading inside of this range right here, back and forth, bouncing off of both of these PD arrays, and failing to have any follow through between them, which also makes sense because of the things going on economically, politically, current administration, things all like that. Also, we've had a really big impulse up the last several weeks. So it does make sense that we're seeing some accumulation right now happening in between two higher time frame PD arrays. So if you found it a little bit tough to trade recently, I don't blame you. It's definitely tough environments right now to trade in, but that is why I'm not really too lenient on things on the higher time frames as much as I normally am. I'm more so going based off of a lower time frame bias, like the 4 hour and below, to really derive my daily bias here. But you can see that today FOMC was a really large range, I shouldn't even say large range, but it was a volatile day, taking out both the previous day high and the previous day low. So you can dive down to the next time frame here, which is going to be the hourly time frame. All right, so we got the hourly chart here. I want to back it up and walk through session by session just so it's really clear on how I got my bias going into the day here. So I want to back this up to around, you can call it the 9 a.m. candle right here, 9 a.m. Eastern time. And the hourly chart was a big reason for why I had the bearish bias that I had going into the day here. So what I'm doing every single time I'm looking at the charts is I'm asking myself, what have we done in the prior sessions, and are the highs or lows protected or unprotected? And what liquidity is still resting that I can target going into the day? So 6 p.m. open here. So on the market, or on Tuesday, the market closed at 4 p.m. and opened at 6 p.m. We had this giant run up here immediately at the open, which was really peculiar. But what it did, it was really meaningful actually, is it went higher and took the previous day high right here. Now it might not look like a previous day high. You might be thinking previous day high is like all the way up here or like up here, something like that. But best way to do it, easiest way to do it, is just go to your daily chart and then do like this. This is your previous day high right here. Okay. So we went up, took that previous day high. What was resting above this previous day high was this hourly fair value gap right here. So I wanted to see how price was going to react to here. Was it going to blast through it and keep on going higher and then take these highs? Or were we going to respect it and start breaking down? And obviously, that's what ended up happening. You can see that all of these candles were respecting the lower portion of this hourly fair value gap as well. So just a rule of thumb, you always want to be looking at how the candlesticks are reacting to the midpoint of fair value gaps. Are they respecting the bottom portion of them? If you're bearish, what are the candles doing? Or excuse me, what are the wicks doing and how are the bodies corresponding with that. For instance, if you look up here in this daily fair value gap, look how the 1 hour candles are respecting the midpoint, not closing above it, but the wicks are doing the damage above it. And then we end up breaking down, right? What do we end up doing right here? Same exact thing. The wicks are doing the damage up here, but the bodies are closing well below midpoint right here and around the lower quadrant, 25% level of this hourly fair value gap. So that tells me that we could be relatively weak here, but I want to see follow through. I want to see structure support that. So we go down and displace through, right? We have this 1 hour fair value gap right here. And now at this point, what I'm asking myself is, are we respecting bullish PD arrays and disrespecting bearish PD arrays, or vice versa? Are we respecting bearish PD arrays and respecting bullish PD arrays? And the case ended up being is we had this huge imbalance from overnight. And to me, based on this movement up here and how we were reacting to this hourly fair value gap, I was leaning more so on the side of this just being a big manipulation candle. And I was considering this as a data low because this was backed by some sort of political or economic news. This wasn't just a normal candle, right? So this low was important to me. And right below that was previous day low. But how do I know that price is going to go all the way down there? Well, you never 100% know, obviously, but you can come to a strong opinion that it's going to based on how we're reacting from key levels and what the previous sessions have done, right? So going back into it, we had this hourly fair value gap right here, and what were we doing? Well, from midnight opening price right here, you can see at the bottom, this is 12 a.m. We opened up, traded into that hourly fair value gap, scooted a little bit lower right here, and then overnight, bunch of back and forth right here until we had one more jump up into that hourly fair value gap, but this time it was more meaningful to me. Why? Is because we had SMT at these highs, and when we go down to the 15-minute time frame, you're going to see that these are session highs right here, and this is going to be really important in how I determine my bias moving forward, right? Because what happened following that is a really strong displacement through on the hourly time frame. Through what? This low right here. And to me, that's enough to be a market structure shift. Some people might say this low, some people might say this low. Um, I really wouldn't say this low right here was your market structure shift. I would say it was really initially this low, but at this point, I just wanted to see something more convincing, right? So this technically was your market structure shift. I would not consider this, but this was the most convincing shift to me. So this gave me confidence that we were going to see that continuation move lower. And that's when I alerted my Discord in the pre-market that I wanted to see a continuation lower to target this resting liquidity down here. So I'll show you that here. Okay, so this is me alerting my Discord saying I wanted to see continuation lower from here, right? So really simple stuff. Following into that, right now I wanted to go down to the lower time frame since we were leading up into 9:30 a.m. open. And so whenever I'm approaching 9:30 a.m. open, I really derive my bias from the 4-hour hourly time frames and a lot of the times the 15-minute time frames as well. But I'm looking for bearish PD arrays that support my bias on the 5, 15, and hourly time frame to look for shorts from or trades in the direction of my bias from. There was nothing here on the hourly yet at the time of when I was looking at it besides this 1 hour fair value gap. So this really was the most important level for me going into the day. So now let's head down to the 15-minute time frame to find some more things that were supporting this and also talk a little bit more about this action up here because this is extremely important. All right, so now we're on the 15-minute time frame here. And first I want to talk about these highs up here because if we think about our session highs, I'll put on my session indicator right here. That's going to tell me the highs and lows that are during that kill zone. You can see that London high was right here. And where was that? In the hourly fair value gap. So to me, that's a protected high, and that gives me a lot of insight going into the morning. What kind of insight am I talking about? Well, as long as we stay in a bearish model or a sell model, meaning price moving lower, right? And I'm bearish, as long as we keep doing that and don't hit any higher time frame levels, like any key bearish levels or sell side liquidity, I'm expecting those highs to remain protected, remain untouched. I don't want to see them traded to, right? So that gives me another strong sense of confidence that I'm on the side or I'm on the right side of price as long as those highs stay intact. And it would make sense for those highs to stay intact because it's supported by the hourly fair value gap if you just think about it logically, right? And what else happened here? London high was swept, and I want you to pay attention to these two highs right here while I compare them with ES, right? ES took those highs and NQ failed to do so. That's bearish SMT. That's another thing that we can put in our back pocket as another form of, some more confidence in saying that we're on the right side of price action. It's just another, again, form of confirmation to be more confident in your trade. Okay. So now let's get into this price action down here leading up into 9:30 a.m. open, right? So you can see with this vertical line, I have 9:30 a.m. marked, and this is what I do every single day. And I want to look at what are important highs near where we're at right now and what are the important fair value gaps. So obviously I marked that hourly fair value gap right here. That was really important to me. Now I want to talk about another important fair value gap and important highs as well. You can see we have this 15-minute fair value gap right here, and it's actually supported by a 15-minute bearish order block. Why is this not a valid place to look for shorts from? I wouldn't say it's not valid, but if you have an hourly fair value gap right above a 15-minute time frame or a 15-minute fair value gap, the higher time frame fair value gaps are always going to be more dominant and have a higher um, or have more meaning in price as opposed to a lower time frame. So an hourly fair value gap is going to have more meaning in price compared to a 15-minute fair value gap. So you can take trades from here with a 15-minute and an hourly or a 15-minute order block. But just know if you're trying to take trades from fair value gaps and there's a higher time frame fair value gap above where you're looking to take trades from or in close proximity of where you're looking to take trades from, just know your win rate is going to be lower because a lot of the times what you're going to see is these invert and then go and mitigate or redeliver into these higher time frame fair value gaps. Wow, I can't talk, and then move lower. Okay, so that's one thing to really note and keep in mind because that can save you from a lot of bad trades. And that's exactly what ends up happening right here. As you can see, strong movement higher, right? And if you remember what I was saying before about the midpoint of fair value gaps, what have we done on a closing basis in this 15-minute fair value gap is closed above this high. And this is when I was alerting the Discord that this 15-minute fair value gap is likely looking a lot more weak and this 15-minute intermediate term high is in play. And when I say in play, I mean it's more likely to get hit. Okay. 15-minute intermediate term highs and lows. I've said this in my past videos, but intermediate term highs and lows are extremely important to me. They're important because intermediate term highs and lows are highs and lows that reside inside of fair value gaps. And so a lot of the times trades can form here or it can be a really good draw on liquidity. Since I was bearish, I was looking for a trade to form here after a manipulation higher. Why am I looking for a manipulation higher is based on time. Okay, so time and price are aligned. 9:30 a.m. open. What can we expect pretty much every single day is some kind of manipulation to happen right off the bat, anywhere in the opening range from 9:30 a.m. to 10 a.m. Where do I want that manipulation to happen? Is away from my overall bias, meaning since my bias is lower towards these lows right here, I want to see the manipulation happen away from my bias to take key levels. Hourly fair value gap, 15-minute intermediate term high. This is a great level to try and look for shorts from because you have key levels and you have that market profile behind you as well. Is the manipulation higher? So let's go down to the lower time frames where I actually took my trade from, and we can walk through step by step of exactly what I was looking for here. All right, so I have us on the 1 minute time frame here. I did not take the trade on the 1 minute time frame, but I want to show you my full process of how I determine the time frame that I want to take my trade on, where it's going to be the most high probability. Okay, so I'm waiting for price to reach up into these key levels right here. I don't want to get faked out by any kind of moves here because we already determined that since there's an hourly fair value gap above right here, this 15-minute is not high probability. Okay, so if you are going to take trades in that 15-minute fair value gap, I would recommend that you do it with low risk because you run the risk of price moving higher into that higher time frame fair value gap, which is of course what ends up happening right here. Okay. So we're moving, and we're waiting for this level to get hit. We're remaining patient. We're not getting tricked into any type of move higher or lower right here. We're not afraid of price moving to London highs or session highs up here because we know they're protected with a high degree of probability. And even if they do get hit, then it's okay, right? You're allowed to take losses and things like that. But just stick to the plan and remain patient, right? You avoided all of this stuff down here, all of this bad price action. It's about coming into the day with a plan and sticking to it and not trying to, catch anything that you see. Be a part of every single move, okay? So now we're at a point where we took this 15-minute intermediate term high. This is a super important level where I'm on these lower time frames, the 1 minute through 5 minute, and I'm looking for price action that supports lower prices, meaning inversion fair value gaps. That's my way of entering trades is inversion fair value gaps. The inversion fair value gap usually happens after we get a change in the state of delivery, which is going to be like a bearish order block. That's typically the sequence of how things develop is there's going to be an order block, there's going to be an inversion fair value gap, and then there's going to be a breaker. So if you have those three things in your trading setup, then you have a really good trade that you're being a part of. Okay. So I'm just on this time frame and I'm waiting for price action to support lower prices. And what do we have right here? Take a look at this up close candle right here, right? It took this high. And while I'm doing this, I'm looking between ES and NASDAQ to look for some sort of um, crack in correlation, meaning highs are getting taken on one and not the other. And these are very, minor internal highs, but to me, it's still important because take a look at these highs right here. Again, 15-minute intermediate term high inside that hourly fair value gap. That high was taken right there, the 1029 high. And on ES, it was not taken. What else do we have? This was the last up close candle that caused the SMT right here, that caused that crack in correlation. This is your change in the state of delivery. So now things are starting to look good. Now what I want to do is I don't want to jump in a trade right away. I'm not entering off of order blocks. It's just one of the first things that tells me that there's that change in the state of delivery that I'm looking for on one of my entry time frames. But what I'm looking to get entered off of is an inversion fair value gap. And it's going to be on any one of them between the 1 minute and 5 minute time frame. I'm circling through and cycling through those time frames that you see listed up here, one, two, three, four, and five, and I'm looking for what is the highest time frame fair value gap between these times that's in the current price leg that we're in, meaning this price leg right here. Is there an inversion fair value gap in this price leg that I can look at for price to invert? Now that structure is supporting it. And we have a couple small ones here on the 1 minute time frame. But remember, I got to cycle through the other ones. It has to be the highest time frame. Is there a 2 minute? No. Is there a 3 minute? No. Is there a 4 minute? Yes. Right here. And is there a 5 minute? Nope. So 4 minute is the highest time frame fair value gap. So now what I'm looking at is the 1 minute time frame compared with the 4 minute time frame. So I'm going to set those side by side now. Okay, so now I got these set side by side, and I'm really just looking at the sequence of events here on the 1 minute compared with the 4 minute. The 1 minute is showing me a lot of good structure here so far. SMT, order block, and we're trading lower, right? Showing respect to this order block right here. Now, what would give me that really good final confirmation to actually enter the trade is a close below this 4 minute being the highest time frame here. And you can see that it takes us a little bit to do so. Did not get the close right there, right? And this is where you got to be really patient, is we never got it closed. It went right to the bottom of that. So that's why going through the time frames is so important to me, is things like that can happen. Okay. As soon as we get it closed below this blue box, I'm entering the trade. And we got to close right there. Okay. Stop loss at the high of the SMT, right? And SMT in trades is really, really good and really increases the quality of the setup because it gives me a quote unquote protected high, or what should remain a protected high if we're on the right side of price action, right? So I know a clear place where I can put my stop loss is at the SMT right here. And then that's where I entered my trade, right? That was really it. And I had really good reaction right away off of that as price just began to absolutely tank. And my original plan was not to hold this all the way to previous day low right here. That was originally not the plan, but once I started to see price react the way that it was, this was my overall higher time frame bias like I mentioned before. I take low hanging fruit targets. What I'm working on in my trading is holding runners to my higher time frame targets, but I am really skilled in taking the lower time frame targets to have a higher win rate and more consistency. But whenever I have all of these things in line where the hourly looks really good, time aligns with it where it's 10:30 and we're seeing that reversal right here, a 9:30 a.m. to 10:30 move higher, manipulation above these key levels right here, and again, things on the hourly are looking good as well. I made the decision that I'm willing to hold this for the duration of the daily range because I was really confident in price being able to make its way down there. And that's what ended up happening. So it wasn't really anything special that I did differently compared to what I do for other days. It was just today was backed by a lot of good volatility. I had that FOMC push for later in the afternoon. Right? We originally got this push below my first target on the day, which was 6 p.m. open in that data low that I was talking about. We had a good sized retracement during this, and I will admit that I was very uncomfortable during this. I thought that I was for sure going to get stopped out right here at break even because I wasn't trailing my stop. I just set it to break even right here because I was that confident in the draw getting hit. But we had a really big move higher right here. Um, or what felt like a big move at the time, right? But it really was just rebalancing this entire range right here. And at 1 o'clock, we started to see that move lower. And why is that? Why at around 1 o'clock? Well, again, just like I did in the morning, looking back at what the previous sessions did, being Asia and London, whenever you start to get into the afternoon, you can look at what did the prior sessions do, being lunch and AM session, okay? And what lunch ended up doing was obviously, or not lunch, the AM session obviously ended up selling off. Lunch had the classic lunch retracement macro. We still had targets left here, right? Bearish targets. And now we had an AM low that was resting right here. And so best case scenario and what ended up pushing this trade lower for me was a New York PM continuation of AM sessions price action. So AM lower, New York lunch retracement, PM session continuation. So really simple ideas, but this is why you can have more confidence in your trades when they're backed by market profiles right here. And yeah, what ended up happening was the FOMC release was right around here, 2 o'clock, traded up into this 5-minute fair value gap and this 5-minute order block right here, and then had a one big last push here to take all of my targets and pretty much hit the low of the day here. So it was really just an amazing trade. Again, one of the best trades that, or if not the best trade that I've ever been a part of as far as a points goes, 220 points. It was pretty much like a 1 to 12, 1 to 10-ish RR, risk to reward. So yeah, really happy with this trade. I hope this breakdown helped. I know I covered a lot of different things in here. It might be a little bit complicated. If it is, just please leave any questions in the comments if you made it to this point in the video. If you want more breakdowns like this, join the Discord. It's free. I'm doing live sessions. I talk with all the members. I give ideas. I walk through price, tape read, trade breakdowns, weekly breakdowns. I do all of it. Okay, so it's really like the value that's in there is I would say it's worth over 100, 150 bucks a month. You know what all these other people are charging, and I'm doing it for free. So please feel free to join that. If you found this breakdown helpful, please subscribe to the channel. I'm trying to get to 100 subscribers by July. That was my goal for the year. So hopefully I can get there with the help of you guys. So yeah, again, thanks for watching and take care. Hope this helps.